Ever since Bitcoin hit its high at 69,000 in November 2021, from the start of the new year, things have not been very hunky-dory for industry as a whole or the world economy as a whole. You've had a war in Europe. You've had, rising inflation, which led to, increasing interest rates. You've had supply chain woes, which added to, increasing, standard of living, cost of living, actually, I'm sorry. So there are multiple factors that have gone to the detriment of the global economy. So if you look at the recent budget, which Ms. Sitaraman announced, you had the new tax laws that also came into the picture. So you had a 30% tax and a 1% TDS. The 30% tax is something that we can live with because that's it might be slightly on the higher side, but that's okay. Now the 1% TDS, what it's done is that it has sucked out all the liquidity, all the volumes out of all major exchanges in India from the start of the new financial year, which is the 1st of April. And then you have, banks that are refusing to work with crypto exchanges. That's the second point. And three is this entire global economy that is crashing all around us. So we've had multiple pressure points that are affecting the crypto economy, but this is just not restricted to the crypto economy. Industry the world over is not doing too well. Just to give you a perspective, Netflix is down by 75%. Zomato is down by 50% over the last 6 months. So Bitcoin or crypto down by some numbers is okay, right? It's now behaving more like a tech stock. So yes, it's understandable. Yes, the war in Europe, the weak economy the world over, rising interest rates are the main contributors to this. Until the sentiment improves worldwide, and the economy picks up, this is just a part of a larger economy, right? Crypto is just one small component of the entire world economy. So, the world is in for some interesting times, and so is crypto. Till last year, we were living with, in the US especially, we were living with 0% interest rates. So it was free money, right? Plus you had, the checks that went out during the COVID crisis. A lot of people got, checks in the US, which they actually played around with in the stock market or in the crypto markets. But now what's happening is that the Fed is realizing that, they have to, cut down on this free money. And we've seen that, the first steps have already started with the rise in interest rates. So the easy money part of it is over. Things will get difficult before they get better, is my reading of the entire situation. Everyone is moving to more safer, bets. So if you look at the crypto industry, people are moving away from shit coins to altcoins. From altcoins, they're moving to the original blue chips, which is Bitcoin and Ethereum. This is just it happens the world over. You move to assets that you believe in will stand the test of time, and that's what's happening here. So there is a switch that is happening in these times of, I don't know whether we can say the recession word yet, but we are close to that, is what I believe. So people who say blockchain is good and crypto is bad, haven't understood the concepts of blockchain yet, or they have to, a lot of more reading has to happen. So what is blockchain? Blockchain is just a ledger, right? What a blockchain does, a centralized computer can do. We've been having that for the last 100 years or the last 50 years. But what a blockchain does is that it incentivizes a lot of people to actually validate transactions, to make sure that the double spending problem is taken care of, to make sure that, people don't put fraudulent transactions. That is how you secure the network. And why would they do it? They do it because they get rewarded in crypto. So crypto is, or the cryptocurrency is, the reward of securing the network, of making sure it runs the way it is supposed to run, and of making sure that no double spend happens. So I can, it makes sure that I have the money to send to you if I'm sending it via the blockchain, which is what a blockchain is supposed to do. And how do you do that is through cryptocurrency. If you remove cryptocurrency, there is no inbuilt mechanism for anyone to be incentivized to secure the network, right? Bitcoin is the only network that in the last 12 years has not been hacked even once. It is the most secure network in the world. So even if you want to replicate Bitcoin at this point of time, and if I were to give you $100 billion, you will not be able to do it, because it has grown organically over a period of time through the beautiful mechanisms of game theory, where everyone is incentivized to behave properly. It is now next to impossible to replicate. Others have tried it, right? There have been hundreds, 20,000 coins now apart from Bitcoin, but none of them have been able to replicate Bitcoin. So to say that blockchain is good and Bitcoin is, or crypto is bad, is very, very difficult, because one cannot live without the other. Then you don't need a blockchain. All you need is a centralized computer that does what it's doing right now. The entire point of Bitcoin is that, or blockchain is that, you don't need a central authority to do a lot of stuff, and everything is out there is open. It's not private. You can't do that in the current system. You can't give everyone access to everybody's bank accounts, right? Because there's a name and number associated with it. And the point of Bitcoin is that it is pseudo anonymous, because it is transparent. Anyone can check whether the transactions are happening. All those mechanisms happen because of crypto. So you cannot have one without the other, is my reading of the situation. What is happening, Avneet, is now a lot of us are experiencing our first bear run of the Bitcoin or the crypto industry for the first time. It's like, box seat tickets, and we're watching that entire carnage unfold in front of us. But if you zoom out over the last 12 years, as I mentioned earlier, Bitcoin has lost 50% of its value 7 times. 7 times. It's lost 80% of its value 3 times. So this is not new to Bitcoin. It's a new asset. It's just 10, 12 years old. Volatility is high because it is traded 365 days of a year, 24 hours a day. No asset does that. No asset class does that, right? Banks shut down on weekends, stock markets shut down. So what happens is that anything, suppose something happens somewhere at one part of the world when the rest of us are sleeping, those guys have the opportunity to act first, because it's on, always on. So the idea is that it will be volatile. The idea is that there will be wild swings. There are no circuit breakers here. So we are experiencing all that for the first time. When tokens go down by 30% there are swings of 30% that happen up and down on a daily basis. It is it's a feature, not a bug. Things will get a little bit more stable in going in the future, because what is happening is that you have a huge wall of money, institutional money that which will come into crypto. Right now, what is happening is that most countries are actually taking baby steps towards regulation. And what we have to understand is that innovation precedes regulation. Now, what is happening is that a lot of authorities are now beginning to understand what crypto is, and they will put measures in place so that it behaves just like any other market. How much they're successful or not, that only time will tell. But what is happening is that over a period of time, this will become, or at least our hope is that this becomes a part of the world economy, and that is inevitable, right? It's like a bull and a bear cycle. So the crypto industry, especially, I can speak only for the crypto industry, you had these long periods of bear markets from 2018 to 2020. You had a long bear market. And before that, again, there was another bear market before that. Things have always, what has happened is that things have always, gone slow during a bear market. And then what happens is that a lot of the companies get built during this period of time. So we don't have to look too far. Let's just look at, let's look outside the crypto industry. Let's look at the dot-com crash of 2000. What happened was that everybody believed that this was the end. It was the internet.com crash. I don't know if you remember that. Pet.com went bust. A lot of companies went bust. And people were saying the same things about Amazon. Where Amazon is at this point of time. Same thing happened in 2008, when the banking collapse happened. But after that was a golden period when it came to innovation. You had Twitter, you had Facebook, you had Snapchat, you had all these crazy tech companies coming out of nowhere. So I don't know who said it, but it's called creative destruction. When you have less money, you try to do more. And what is happening is that in 2018, it was a question whether crypto will survive. But now you have so many viable projects happening. You have decentralized finance, you have NFTs, you have DAOs. There are so many new projects happening in this place that it's like a laboratory where there are hundreds of experiments happening together, and 2 or 3 of them will succeed. It's just like just like a VC funding hundreds of companies, and 3 of them will turn out to be big. Similarly, imagine the wall of VC money that is coming into this space. You'll have a lot of companies that will come out which will transform our lives for the better.